Well, one area that I actually don't expect you'll hear an enormous amount about next Tuesday is the Affordable Care Act. There'll probably be a sort of pro forma apology for the glitches in the website. And no doubt the president will point to someone up in the box who finally got health insurance for the first time in their life, thanks to the wonders of Obamacare. But that should be about it. I really think then he'll quickly move on to some other subject, which is a little surprising considering we're talking about the signature achievement of this presidency. You would think that when it went into effect this year for the first time, we'd be talking about it a great deal. On the other hand, if you look at this and look at the state of Obamacare, it's pretty grim right now. I mean, let's just start with the fact that the new health care law really isn't covering anybody. I mean, very few people are actually getting insurance out of all this. If you actually look at the numbers that are being put out by HHS, they estimate that roughly 2.2 million people signed up for health insurance on the exchanges, and about another 4.5 million people got Medicaid coverage out of this. So you have a little over about 6.5 million people getting coverage, which, if you take them at their word for this, means we've covered about 11% of the uninsured in this country. And for that, we're only spending $2.5 trillion over the next 10 years. That's not a lot of bang for your buck. But actually, if you want to look a little bit deeper into those numbers, it doesn't even look that good. Let's start with that 2.2 million people who've enrolled in Obamacare through the exchanges. That includes everybody who selected a plan on an exchange, went on the website and clicked on a plan, regardless of whether they paid for it. It's a little bit like Amazon counting as a sale everybody who puts something in their cart, regardless of whether or not they ever check out. Only actually about 70% of the people who selected a plan have actually paid for it. And paying for it is a little bit questionable right now, since the website can't actually pay the insurance companies after the people pay for it. But that's a whole different question. Let's say about 70% of people have selected the plan and paid for it. So you're down from that 2.2 million down to about 1.5 million people who have signed up on the exchanges and actually paid for it. But it turns out most of them were already insured. That included people, for example, about 5.5 million people lost their health insurance because it wasn't in compliance with the ACA requirements. Most of those ended up getting insurance. It might have been more expensive and had benefits they didn't want, but they ended up getting insurance. But that meant they had to go down to the exchanges and enroll in insurance plans, and those all get counted. And then there was people who were working and their employer dumped them. A lot of the part-time workers or spousals of workers and so on who got dumped because their employer didn't want to pay the increased insurance premiums and said, hey, you can go down and get a subsidy on the exchange now. You're off, go get them. So they lost their employer-provided insurance and they went down and signed up. They're all counted as people enrolling in Obamacare. In fact, if you look at some of the surveys that have come out, somewhere between two-thirds and 90% of the people who have enrolled through healthcare.gov and the various state exchanges actually were previously insured. So we're actually, at the most optimistic end, down to about 500,000 people have signed up for insurance who weren't insured before, or as few as 150,000 people may have signed up for insurance that weren't insured. But then you have to subtract from that roughly 500,000 people who, by the White House's own count, were among that 5.5 million people who lost their health insurance previously, but haven't found new health insurance yet. They were previously insured, but because of Obamacare are now uninsured. So if you subtract those 500,000 from either 500,000 signing up or 150,000 signing up, you end up with somewhere between a net zero and a loss of about 350,000 people with insurance. Now, of course, then you can offset that. You do have those Medicaid enrollments. They say about 4.6 million 4.5 million people have enrolled in Medicaid. But it turns out that number isn't very accurate either. In fact, they don't actually know how many of those Medicaid patients were previously uninsured. It turns out those numbers include people who are re-registering, who are enrolled in Medicaid and then have to re-register for one reason because they become eligible. It includes people who had private insurance but found out they were now Medicaid eligible and then switched from the private insurance to Medicaid. And they were counted. We actually don't have any idea how many of those Medicaid people were enrolled, but maybe, let's say, maybe you're somewhere around half. So you get you get 2 or 3 million people signed up. So all told, what are you going to get? A couple of million more people who are insured, maybe about 2 to 3% of the uninsured population. In exchange for that, all you have to do is have 5 to 10 million people lose their health insurance that they currently have and like. Now, that's just this year because that's largely the individual market. The president, as Ilya mentioned, just sort of arbitrarily postponed the employer mandate by a year. But next fall, the employer mandate, the people who get their employer-provided insurance, are going to fall under the same circumstances as the individual market did today. That is, they're going to find that their policies don't comply with the regulations under the Affordable Care Act, and those cancellation notices are going to go out again for many of those people. And in fact, it's estimated that as many as 78 million people could find that their employer-provided insurance is non-compliant, and they will lose their current coverage. Now, that's not to say 78 million people are going to go uninsured. The vast majority of them will simply switch to another employer-provided plan that may be more expensive, but they'll still have insurance, or else they'll go down to the exchanges and let the taxpayers subsidize them in one way or another. But 78 million people won't be able to keep their current insurance plan, even if they like it, period. In addition to that, of course, all you have to do is allow many people to not keep their current doctors. We know that when you switch plans, the new plan you have may not have a network that includes your current physician. And in fact, many of the networks are very small on these exchange-based plans. Doctors are being squeezed in fact 2 ways. In one case, insurers are dropping a lot of doctors from the networks because they don't want expensive doctors or expensive types of illnesses treated or expensive hospitals, which is one reason why many of the top medical centers in this country are not included in exchange-based plans. For example, Vanderbilt Hospital in Tennessee, Cedars-Sinai in Los Angeles, Sloan Kettering, the #1 cancer center in the United States, is not included in most New York State exchange-based plans. And then on the other side of it, doctors are having their reimbursement rates cut by the insurers in order to save money, and they're saying that we won't accept that low reimbursement rate, and they're pulling themselves out of these plans as well. And by some estimates, as many as 60% of physicians will not participate in exchange-based plans. So the possibility that your doctor that you currently have may not be part of that plan grows substantially. So let's see. We cover a couple million people at a cost of $2.4 trillion. We kick millions of Americans off their current insurance. We make it harder for you to keep your current doctor. And oh yes, we set up a potential adverse selection death spiral in the entire insurance industry, because not only are very few people signing up, but the ones who are signing up are tending to be older and sicker than was expected. I mean, the whole basis for the healthcare law is the idea that young and healthy people will overpay for insurance in order to subsidize older and sicker people. I mean, everybody admits that that's the basis for the law. That's essentially what they're trying to get done. To do that, you have to get young and healthy people to sign up, and they estimate that they need about 38% of all the people who enroll in healthcare plans through the healthcare exchanges to be under the age of 35 and in good health. Well, it turns out, according to the numbers released by HHS, that only about 24% of the people who have enrolled in plans are actually under the age of 35. Now, we don't have any good data on their health status, but the insurers looking at this say that the people who are signing up are much sicker than they expected them to be. Both Humana and now, just the other day, Aetna, have now indicated that the people enrolling in their plans are far sicker than they assumed that they would be when they did their actuarial estimates on what premiums would be. And they don't know that that can be sustained. If that's the case, then they're going to face a problem that what actuaries call the adverse selection death spiral, which means if your insurance pool is made up primarily of sick people, premiums has to rise. That means healthier people drop out of the pool gets still sicker, premiums go up, healthy people drop out, and so on until the whole thing begins to collapse. Fortunately for the insurance companies, and unfortunately for the taxpayers, the law does have something built in, a $25 billion fund. Actually, it's 25 or 45. I think it's a $45 billion fund that's built into the law through these risk corridors, which in essence will subsidize losses that the insurance companies suffer as a result of adverse selection for the first couple of years in order to try to hold down premiums. So essentially, taxpayers end up on the hook, not the insurance companies. The insurance companies signed up for a bad deal, but don't worry about them. We're all going to pay that bill. If all of this doesn't sound like a very good deal to you, you got a pretty good reason for feeling that way. You know, I mean, this has got to be, you know, the most incompetent law that I have ever seen put together on Capitol Hill. And let's face it, you guys have done a lot of pretty bad laws up here. But in terms of something that's just dysfunctional, I've never seen anything quite like that. So I would not expect to see a whole lot of bragging going on next Tuesday night, for very good reason.